Traders, I just sent a trade idea into VIP, and what I want to do is explain my strategy. Let's go out, we'll go to the weekly chart here, and then we're going to work our way down through these time frames, and I'm going to explain a few things. The first thing, in fact, we'll just start off here. What brought me into the chart was this alert down in here, Aussie Kiwi on the 3-minute chart. I think this one here might be the 5. We'll go down to the 3 and we'll have a look, and we've got a red dot on the 3, might even have a couple. But that's what brings me into the chart, the alerts on the 3M. Look at all these opportunities here in the alerts log. I come in and I've got my 5 chart layout here. I'm just looking at a few things. I want to see that the higher time frame is bearish more than anything. With that established, the other thing I'm eyeing on this chart is, see this white line up here? This is I think this might be a 1 hour chart. And I think we're on a 5M here at the moment. We'll go down to a 3M and have a look in a sec. This white line here that you see here, that's a previous monthly high or low. Look what we've got here on this indicator. Look, we've got red alerts, and look at these divergence lines, this red divergence. So we can see that underlying momentum is losing bullish momentum, and this is red. The other thing we've got here, if you have a look, previous daily high, previous daily low. It's traded into this previous daily high. It's trading into a monthly level. And look what it does. It grinds up and then spikes into that liquidity. And then we start to see it kind of rolling over here. If you're conservative, you could wait for a break of this, retest and fail, and enter down here. I tend to get a little bit more aggressive. As soon as I spotted this on the weekly, I thought, yeah, look, I'm good to go, and on the daily. So let me explain. We'll go to the weekly time frame now, and I'll explain this. First thing I'm looking for, I want to see that the weekly is bearish. So when I pull this out here, admittedly, it's kind of been ranging sideways here, but with a bearish tone to it. Have a look at this here, for example. This range builds liquidity. We get this stab up into it. This is big, guys. This is really big money involved here. And of course, I mean, the banks are involved, and we get this kind of move. So this is telling me that they are invested short. Where's their resting liquidity? Above this level here, below here, right? They take it out, lower high, yeah, the lows are meandering up a little bit, but this gives me more of a bearish sense than a bullish sense. I particularly like this, but remember there's risk involved, and we could get taken out. That's a possibility, but I like this distribution here, strong sell, and retrace into the low of this distribution. Can we get taken out? Well, the difference, have a look at this. See, we've got this candle here, and it traded back up, it pushed further. See, we don't really have, see how this is ranging through here. That's a big build-up of liquidity above this, more so than here. This kind of spiked up and then rolled over. Okay, so there's not much resistance, if you will, above here. You need to see this balance, this range, this value area building up, and then a spike up into it, and then the move down. That's what's caught my eye with this particular move, and I think that the probability factor is in our favor. Hope that makes sense. If you're looking for a retrace like this, again, let's just go over that. Have a look here, for example. See this big value area here, well, balance of buy and sell orders building up. This sets up a massive amount of buy-side liquidity above here in the form of stops. That fills their quota. You know, if you're going to sell it, you need a buyer. So they take it up, and, you know, you get a move like that. So you always want to see some kind of a range, a spike, you know, and then look for the move. That's what I'm looking for. And then they take out that, and then, you know, you get this, and then the retrace back. That's the kind of chart pattern that I'm looking for. I call it a fakey shaky. This is the fakey shaky. Sometimes you get a bit of a fake out, and then the shakeout, or it can just be a straight shakeout where they shake out retail traders. Right, so we've got the setup here. I quite like it. And the other thing that I'm always looking for in a trending environment, now that I've convinced myself this is bearish, I'm always looking for this outline here, the mean, to be broken, retrace and retrace and retest to the mean, to trade back into the mean. But it has to have this range and a spike up and then the retest. That's important, okay? So this is a stronger build-up of liquidity. This is fairly thin liquidity above here, easy to blow through. So I think this level is going to be defended. I could be wrong. I think I give this an 80% chance of success and always allow a 20% possibility that it goes against us. Stock gets taken out, so you have to manage your risk accordingly. Don't go in with a huge lot size. So now the other thing I will do with this then is, in this trending environment, it has to meet my Fibonacci criteria, and I'm going to go from the swing high down to the swing low. This 50% red line here, this is my line in the sand. It has to cross this line, and my ideal entry is going to be through this range here. As soon as it touches the 61.8, I'm good to go. If I come in late and I don't see it and it's traded up in through here, well, you get a better entry. There's a couple of things that you want to notice. Well, we'll go down to the daily time frame. We'll have a look at that. All right, some important stuff here. I've got to go back out and show you what I'm doing in terms of potential targets with this. But first up, okay, we've got this red dots, we've got this orange, and we've got this white line. A white line is a monthly, orange is the weekly, and the red dots, well, all these dots that you see on our indicator here are variations of the average true range, and they give us some pretty good levels. So we can see this build up in here of orange lines. This is all previous weekly high or low, the monthly, and this is why this is a strong resistance level. Look at all this. And I mean, you can see with all of these orange lines running back through here that this is an institutional level. This has been defended. I guess there's a lot of business that's been done here. So I'm just building the argument for that. This is potentially going to be a monster trade setup, and I'll get into that shortly. We got the daily. Okay, back in here we've got this big green candle prior to these red candles. So that's my daily distribution. Mark it up. This is the weekly. So we've got this nested daily and weekly. Short, my stop loss will go above this high here. So that range, okay, and above these red dots. Going in with a market sell. All right, let's get to some targets, and then we'll go down to the lower time frame and I'll show you something. I've just marked up on the weekly time frame here. See this red candle prior to this impulsive swing here, accumulation. So I'm just going for the high of that candle. You can see how it's traded down to it. That's a target. And then prior to that, you want to look for these accumulation distribution levels. Okay, so we've got another accumulation range down in here. The high of that candle here comes in. You could actually pick up this high here. My bad, hang on. That candle. So there's a target, and that stay in until the trend shifts gears wherever the banks decide to take this, if this continues further south. So there's a couple of targets on the weekly. Now we'll go down to, we've done the daily, we've had a look at that. Well, target 1, now that we've established target 2 and 3 down under here, let's just say we enter here, market entry short, stop loss above the dots, something like that. 1-to-1 risk reward brings us down above this low, this range down in here. So I think I'm going to go target 1 right here. We'll call that T1. And this is where I would like to take most of my position off. Commit to the stop, commit to the target. Okay, so we've got 3-to-1 risk reward sitting down in this range down here. This is going to be target 2. So you could scale out. I'll just go slightly above here. By the way, guys, make sure you subscribe if you haven't already, and comment. I'd love to hear your thoughts, and if you're gaining any value from the video, hitting that like button would be an incredible exchange of good vibes. So yeah, I would appreciate that. All right, we got a target 2, and I mean, look, really, after this, it's just a matter of staying with this until we get a change of a break of structure in the trend, you know. And at T2, you're going to be profitable at that stage. Pull your stop loss down, be in the money, and just let it run. See if you can get 5-to-1 out of it. There's your 5-to-1 down in here. What is that? Yeah, okay, what do we got left? Look for a 5-to-1, guys. See if you can go for that. But you know, you leave a portion of your position in. 5-to-1 brings us. See, look at this candle here. Well, that's a big one. Gosh, okay. That comes right up into here. Amazing. So a 5-to-1 is definitely viable. And have a look at our indicator here. See this line? Yeah, just go slightly above that. Just call it a target. And that's quite a nice outcome. If this continues down, seriously, this could be a dynamic target. Just keep trailing it with your stop until we see a break in structure, in market structure. Now let's just go down to the lower time frame and I'll give you some more of my thoughts on this. So over here we've got the hourly chart. Well, I mean, what I'm seeing here, look, and in this case, see our multi-time frame indicator, yeah, it's telling us that these guys are bullish. I'm really going mainly off the weekly in this case, and this is one of my monster trade setups. Okay, so if I'm going for a lower time frame trade, I want to see more of these red, but with a monster trade, I'm just going strictly off this weekly time frame. Want to get some pips out of this, guys. What stands out here are these two lines, the orange and the white, monthly and the weekly. We've got a daily in here as well. I can see a slight little dotted yellow line. So, I mean, this is a pretty big level. We've got another monthly over here. Big level. We've also got this significant imbalance on the hourly that is begging to be filled. 1 hour imbalance. You know, so I'm basically just building my argument. It's probably a 4 hour imbalance. We could, yeah. This whole thin candle is begging to be refilled, you know, trade back down through it. So that's the hourly. And then we've got, oh no, sorry, that's the 4 hour, that's a 4 hour imbalance. My bad. I like it. 4 hour imbalance. And then we go down to the hourly chart. Look at the divergence. So this is just backing up my idea. Previous daily high, we've just touched it. The levels. Then we can go down to this, start with a 15. So this is just working our way down and looking at price action. All the divergence are coming in here. What I really want to see with this now, and I'm probably jumping the gun a little bit, I'm getting in early. It's the touch on the 62.8 fib that's really got me going. But if you want to be a bit more particular, here's what you can look for. On the 15, on the 5-minute time frame, right? You can look for the same thing. So see how this has been ranging. We've got this, well, 1, 2, 3 drive pattern I'm always looking for. You want to see it grinding up if it's a bearish or grinding sideways, and you want to see this balance. So price has been trading through this range. And then what we need to see next is, see this double top here? I'm expecting this to pop up through here, through this, possibly up into here. And then you want to see a big, thin, bearish candle here with nothing left and right of it. And then the pullback into here. So if you want to be a bit more conservative and wait for the setup, just wait for that on the lower time frame. I do tend to be a little bit aggressive. This double top's got me interested. I think that's probably going to pop up into here. So that's the 15, 5, double top, maybe a pop through, and then that would be nice. But the key to this is if it pops up, what you want to see then is, you know, a long thin candle under, and then the pullback into here, and then we're off this low. So I think I'll wrap up the video with this daily. Position size is very important. Manage your risk. Now, I always allow a maximum of 2% exposure on my account. It'll give me 20 trades if I'm going in at 0.1% position size, or it'll give me 10 trades at 0.2. Once you are 100% confident in your strategy, you could go in with 2 trades in a day at 1. And when you get really good, take 1 trade a day at 2% risk. Whoops, there's a dollar sign there. 2% risk. But that's it. If you are seeing a 60 or a 70% win rate consistently over time, without fail, every month, there's no reason why you can't increase your position size, but overall exposure never exceeds that. And this isn't financial advice. I'm assuming you're trading a demo account with no risk at all. Okay, what you do is your business. And I think, look, that wraps it up, guys, pretty much. Again, I'd love to hear your comments on this. And on this daily, we've got a daily imbalance that's begging to be traded through here. Alrighty, that's it. Hope you have a great day. Safe trading, and we'll see you in the next one.